Today we're issuing our latest report on the Irish residential market, which looks at activity levels over the course of 2021 and the first quarter of 2022. So the report looks at overall transaction volumes, the level of construction activity, price performance, and looks at the rental sector. So we now have the final figures for total transactions in 2021, and we see that there were 54,600 private transactions in the marketplace over the course of that year. Now, while that is an improvement on the previous year, it actually represents a 1% reduction on activity in 2019, which is a little surprising and disappointing. If you delve into that, we can see that the new home sector really suffered during 2021, and the volume of private sales, so that's excluding block sales and properties acquired for the social sector, actually declined by 20%. So that was a very significant reduction. If you look at the second-hand side, there were about 47,000 second-hand transactions last year, which is up about 2.5% on 2019. So that's an improvement. But again, there's an interesting story behind it. If you delve into it, we can see the big urban centres, Dublin, Cork, Limerick and Galway, were either on par with the level of activity in 2019 or mildly less. So that's an unusual trend given the vibrancy of the economy. But what we did see is a fairly significant increase in activity in rural Ireland, particularly along the coastal counties. And notably as well, lower value properties have actually seen a much greater level of increase in activity. In some counties, activities were up in double-digit levels when compared to 2019. Now, getting to the root of this, if we look at the stock available for sale, our latest analysis on supply show that there were 14,400 units advertised for sale in the second-hand market throughout the country in January. And that represents a 30% reduction on the level of stock available just 2 years ago in January 2020. So this increased activity in rural Ireland has had the effect of really reducing the available choice. And that is a worrying trend. The most likely reason for this lies in the fact that while construction activity hasn't been great in most locations, it has been more pronounced in the urban centres. And really, we have not seen any replenishment of stock in rural Ireland for probably well over a decade. So needless to say, this type of reduction in available choice has had an impact on prices. So if we just take the first quarter, first of all, average values of properties increased by about 2.8%, both in Ireland and in Dublin. But if you take a longer term view of the market, average values in Dublin increased by a little over 9% in the 12 months to the end of the first quarter, while average values in Ireland increased by over 11%. If you strip Dublin out of the annual figures, we can see average values outside of Dublin grew by over 13%, almost 14% in fact. And again, looking a bit further, we can see average values in the border region and in the south region increased by almost 20% in that 12-month period, while average values in the Mid-East increased by over 17%. So really 2021 and indeed the early part of this year, we're seeing a lot of activity in rural Ireland where the stock simply is not available to meet the demand. And as a result of that, fairly significant levels of price inflation. Whereas in the urban centres, most notably in Dublin, the level of price inflation is more subdued. So with all of that behind us, where do we go from here? There's no doubt that the last 2 years have been very challenging for the property market and the construction sector at large. Whether we talk about COVID-19 and its impact on construction activity, or indeed rising inflation, particularly input costs, which impact the ability to deliver product, and indeed the latest geopolitical situation, all of these factors have stymied the market's ability to deliver increased stock levels. And that will prove to be very, very challenging, not only for this year, but into next year. It is therefore absolutely imperative that every step is taken to support the market and to facilitate a further increase in supply. So this means that the government initiatives such as Croí Cónaithe or shared equity need to be launched sooner rather than later. They will have a positive impact on the market and they do need to be released as quickly as possible. We also need certainty around Help to Buy. We believe it may be coming to an end at the end of the year, but that hasn't been confirmed. So that also needs to be dealt with. And finally, and perhaps most critically, the situation with the rental market has worsened over the past 12 months. So once again, a bit like the owner-occupier market, we're seeing very strong levels of rental inflation, particularly in rural Ireland, but perhaps even more importantly, the stock of available accommodation to rent has fallen to a level never seen before. And this is going to have a huge impact not only on the competitiveness of our economy, but on our society at large. For every one investor buying in the rental market, at the moment, almost 3 are leaving every single month. And that's a massive problem for future supply. So if there is one issue that the government really needs to address sooner rather than later, we need to stabilise the rental sector, we need to encourage existing landlords to remain, and we need to encourage more private landlords back into that market, particularly in rural Ireland, if we are to prevent further rental inflation and further depletion of our competitiveness. Thank you.